They didn't crash silver by accident, they crashed it on purpose, and the people who understood that walked away wealthier than when they arrived. There is something happening in the silver market that most investors are watching, but very few are truly seeing. By the time this is over, you will understand not just what is being done to the price of silver, but why it is being done, who benefits from your confusion, and how the financially intelligent have always responded when powerful forces manipulate the things ordinary people are afraid to touch. Let's start with what everyone agrees on. Silver has been suppressed. The evidence is not conspiracy theory at this point. It is documented, litigated, and in some cases admitted. Major financial institutions have paid billions in fines for manipulating precious metals markets. The CFTC investigated silver manipulation for years. JP Morgan Chase alone paid nearly $1 billion in 2020 to settle charges related to spoofing in metals markets. This is not speculation. This is settled law. And yet, most retail investors look at a falling silver price and think the market is telling them something true. That is the first mistake. Markets do not always tell you the truth. Sometimes they tell you what the largest players need you to believe. Here is something worth sitting with. When a price is artificially pushed down, something unusual happens. The asset does not disappear, the fundamentals do not change, the supply does not increase, the industrial demand does not evaporate. What changes is perception, and perception is the single most powerful lever in financial markets because perception drives behavior, and behavior drives price. So when silver is crashed deliberately, what is really happening is that the perception of value is being separated from actual value. That gap is where wealth is transferred quietly from the people who react emotionally to the people who think structurally. Most people see a falling price and feel fear. The financially intelligent see a falling price and ask a different question. They do not ask, is this going down further? They ask, why is this going down and who needs it down here? That distinction in thinking is not small. It is the difference between being the person who sells silver at suppressed prices and the person who accumulates it there. Now let's go deeper because the mechanics of this matter. Paper silver, primarily traded through COMEX futures contracts, trades at a volume that dwarfs the actual physical supply of silver in existence. For every ounce of real, physical silver that exists above ground, there are many multiples of paper claims on that same ounce. This means that the price you see quoted for silver every day is largely determined not by the physical market, but by the derivatives market. And derivatives markets are where leverage lives. And leverage, in the hands of institutions with nearly unlimited capital, is a weapon. When large short positions are built quietly in the paper market, prices can be driven down sharply, triggering stop losses, frightening retail holders into selling, and generating the kind of negative sentiment that keeps new buyers away. The physical silver still exists. The global demand for it still grows. The monetary case for it remains intact. But the quoted price says otherwise, and most people trust the quoted price more than they trust their own reasoning. This is where average financial thinking becomes genuinely dangerous. But most people miss this. The suppression itself is a signal. Think about what it means that an asset requires persistent, organized, and sometimes illegal intervention to keep its price down. It means that without that intervention, the natural price would be significantly higher. You do not spend billions of dollars suppressing something that is not worth suppressing. The effort to control the price is, paradoxically, one of the most powerful arguments for the underlying value of the asset. The pressure reveals the potential. History has a pattern here that is worth understanding. Every major attempt to suppress silver has eventually failed, not because of a single event or announcement, but because physical reality has a way of reasserting itself over paper fiction. Industrial demand does not care about futures contracts. Technology does not pause because a trading desk needs silver to stay cheap. Solar panels, electric vehicles, semiconductors, medical devices, water purification systems, all of them consume silver at accelerating rates. The world is not becoming less dependent on silver, it is becoming more dependent on it, while the paper market continues to price it as though none of that matters. And this is the turning point. When physical demand finally overwhelms the paper market's ability to suppress, price discovery happens suddenly, not gradually, not predictably, but in the sharp, dramatic way that makes people say they should have seen it coming. Those who accumulated quietly during the suppression phase do not need to predict the exact moment. They only need to understand that the gap between artificial price and real value cannot remain open indefinitely. Gravity is patient. Physics wins eventually, wins. Now, here is the insight shift I want you to carry forward. Most investors are trained to follow price as though it is the primary signal, but price is actually one of the last signals to reflect reality, especially in manipulated markets. The more important signals are found elsewhere. In mining supply, which has been declining for years as low prices make new exploration economically unviable. In central bank behavior, as institutions across Asia, the Middle East, and emerging markets continue to move toward hard assets. In the divergence between paper price and physical premiums, which have been elevated consistently, telling you that the real market is not agreeing with the quoted market. These signals do not make headlines. They do not trend on financial media, but they are the signals that precede major repricing events. Wealthy thinking is not about predicting the future. It is about reading the present more accurately than the crowd. There is also a psychological element here that deserves honest attention. The people who benefit most from silver suppression need patient, long-term holders to give up. The entire architecture of the suppression is designed to produce exhaustion. Prices stay down long enough that rational-sounding arguments emerge. Silver has always been manipulated, people say, and it never goes anywhere. The wait is not worth it. This is precisely the narrative that serves the suppressor. Discouragement is the goal. Capitulation is the objective. Because the moment the long-term holder sells, the suppression has worked. The asset transfers. The value, when it eventually emerges, goes to someone else. This is why discipline is not a soft virtue in investing. It is a hard strategic weapon. Staying informed, staying grounded, and refusing to let manufactured sentiment override your reasoned analysis is one of the most financially powerful things a person can do. It sounds simple. It is extraordinarily difficult in practice. But it is the difference between participating in wealth creation and watching it happen to someone else. The deeper truth about silver and about any asset that powerful forces feel compelled to suppress is that the suppression itself represents a massive subsidy to those who can afford to think clearly and wait patiently. You are being offered the opportunity to accumulate at prices that require billions of dollars and coordinated institutional effort to maintain. That is not a warning. That is a gift if you understand what you are looking at. Real wealth is rarely built in the moments of obvious opportunity. It is built in the moments of manufactured confusion, when the headlines say one thing, the price says another, and the fundamentals whisper something entirely different to those quiet enough to hear it. Silver did not crash because it failed. Silver crashed because making you believe it failed serves a specific and profitable purpose. The question is never whether you see the crash. The question is whether you understand it deeply enough to act with intelligence rather than emotion. If this kind of thinking resonates with you, the thinking that goes beneath the surface, questions the obvious, and builds wealth through clarity rather than noise, then you are in the right place. Michael Tyler Teachings exists for exactly this kind of mind. Subscribe, stay close, and think carefully. The financial world rewards those who do.